I'm going to quickly give you 5 types of dividend stocks that you should not be buying. And in return, you'll see the types of dividend stocks that you should be focused on. Hi, my name is Jeff Wright. I'm the president and founder of Fish Creek Capital in Birmingham, Alabama. Let's quickly go through this list. Reason number 1, they have unsustainable yields. If you see a stock with 8 to 12% yields, that's an annualized yield, make sure you know how the company is coming up with this yield. If you think you're getting a great deal, often these types of companies are bleeding cash or they're in financial decline. It's very important to dig into the numbers if a company is showing a really high yield. Reason number 2, they don't grow their dividends. This is my favorite type of dividend stock to look for. This is what we focus on at Fish Creek Capital, is actually building dividend growth portfolios. They work for the long term. They're awesome. So you don't want to buy dividend stocks that are not growing their dividend. The main reason for this is that they're losing value in real terms thanks to inflation. You've got to be able to beat inflation. And if the stock is not growing their dividend, oftentimes you're not going to be able to even beat inflation. Focus on the company's earnings and how they're growing their dividend, or if they are growing their dividend through their earnings. This is a key point. If you listen to nothing else on this video, don't buy a dividend stock that is not growing their dividend. Reason number 3, they lack business stability. You'll see this often in the energy sector. You'll see a really high dividend, but it's not, again, back to reason number 1, it's not going to be sustainable. They don't have a way to keep paying the dividend. They just don't have the business stability. So if you've got a really high dividend, make sure you know what type of business it is. Be very careful of energy, telecom. Those are 2 to watch out for. Reason number 4, they're overweight in one sector. Make sure that you're not a retail investor that gets sucked into a certain type of real estate investment trust or utility stock, or you're chasing a yield in this manner. You want to have a diversified portfolio and not just be focused on one major stock. And finally, reason number 5, you're missing out on total return. If you have a dividend that is not especially growing their dividend, you're missing out on the total stock appreciation. You want to see that the dividend is growing and also that the stock is actually appreciating. That's a key thing to look for. Okay, there's 5 reasons and types of dividend stocks that you don't want to look for and what you should do in return. Please like this video. Please subscribe. If you're interested in a free financial review of your situation, please click on the link below and reach out. We would love to be able to help you.